Get ready for a thrilling ride through the world of used car sales. The used car industry has been dominated by Carvana and Carmax, but recent changes have shaken up the industry. In this video, we'll explore the unexpected challenges these industry giants are facing and what it means for the future of used car sales. With exclusive interviews and expert analysis, you won't want to miss a second of this exciting video. Buckle up and get ready to uncover the truth behind the changes in the used car industry. The statement, "Tough times don't last, but tough people do," has never been more conflicting than it is in the case of these two businesses. COVID-19 was a tough time for the inhabitants of Earth. On the flip side, this made it possible for businesses that operated online to do so well. Now that the world is moving away from the tough pandemic, the tough times are now being experienced by businesses that did not have an adequate follow-up plan. Generally, all businesses have experienced some degree of downtime because of the world's current economic situation. However, there are specific businesses that feel this the most because consumers don't see such products as a priority. Products like cars. Dealers in cars all over the world are reporting a drop in the sales and prices of cars as consumers reduce their rate of spending money. Cars don't exactly scream necessity. This pressure is getting worse for car dealers. Carvana's signature 8-story vending machine tower in Denver has been empty for some time. The same thing has been seen in various other locations. Not long ago, the company reported a quarterly loss of more than $500 million and laid off 4,000 of its employees. Looking back a couple of years, no one would have thought this would be happening to Carvana. Carvana is run as an e-commerce platform where consumers can buy, sell, or trade used cars. Buyers can have cars delivered to them, or they can pick them up at one of the company's car vending machines. From the comfort of your home, you could browse through cars without dealing with car dealers. On its platform, there's a 360-degree view of vehicles, including a close-up of any flaws the vehicles may have. Next, you make a decision to buy and have your car delivered to you, or you could pick it up at any of its vending pickup locations. I mean, who didn't like the convenience it offered? During the pandemic, the production of new vehicles slowed down because of reduced demand and a shortage of labor. This caused a scarcity and a hike in prices of new cars, making consumers look at used car dealers as a godsend. They were cheap and available. Combine this with low interest rates and the government giving money to support citizens, pre-owned cars never thought it would be so desirable. The rush was mad. Used cars were on a roll. There's a lull in sales now, and the used car business is suffering. Fewer cars are being bought, and many of those being bought are brand new cars. Production of automobiles has resumed, and car dealers are presenting hot deals that are irresistible to attract customers. Now, with the fear of a possible recession and high interest rates, most Americans would rather spend their money on new cars. Typically, many consumers turn to slightly used cars in order to avoid paying the full amount a new car would cost. But now, new cars cost less when other factors are considered, and this is terribly affecting the sales of used cars and their prices. The Federal Reserve's action of raising interest rates to combat inflation has only made it harder to get cars now. The average interest rate on used cars in December 2022 had gone up to 12.37%, as against 10% in the last year. Chris Frey, Senior Manager of Economic and Industry Insights at Cox Automotive, a market research firm, confirmed recently that all is not well with the sales of used cars. He said, "After a huge run-up in 2021, last year was a reality check. The used market now faces a challenging year as demand weakens." The value of used cars fell 14% in 2022, and this figure is expected to fall even more this year. What this will mean for the business is that dealers will be forced to sell most vehicles for less than they paid. Carvana made it to Fortune 500's list as one of the youngest to do so in 2021. This was just 8 years after it was founded. Current report from Carvana has it that its stock price has fallen more than 95% in the last 12 months. And to make the plot thicker for this business, 3 states have temporarily suspended their operating license. As it turns out, many consumers have been complaining about the services of Carvana. Many report not being able to have their cars registered after months of purchase. Some customers have been arrested because of this, and some lost their jobs. Other consumers have reported that the cars they got were not in the condition they were promised, and they had to spend more money fixing one problem or the other. Carvana buys used cars from individuals and other companies and fixes them to be in good shape before reselling them. The logistics of delivering cars and processing all the paperwork have been a lot for Carvana to handle. Well, despite the challenges Carvana is facing, they've not hinted at going bankrupt. In fact, it claims to have enough funds to turn its business around for the better. As a matter of fact, the company claimed that it has $2 billion in cash and plus $2 billion in real estate. Carmax is yet another used car giant company that isn't doing so well. Compared to Carvana though, it is performing better. It makes sense because it has been around longer than Carvana. It was founded in 1993 while Carvana was established in 2012. But Carmax of then and now have a great difference. Its vehicle sales reduced by 21% and its net income came down to $37.6 million. 238,000 cars were purchased by Carmax in the last quarter, 40% less than that of last year. Quite a low figure compared to what it used to buy. Carmax has stopped hiring new staff. That's a cry for help. In attempts to save money, it has stopped its plans to get stocks from stockholders. Stock prices are down by 12% already. Inventory purchase in this company has slowed down too, to allow the company to recover from losses. As of last year, the company recorded an 86% decline in profits. These negative records are attributed to the same factors hammering at Carvana: reduced interest in used cars and high inflation. Carmax revenue dropped by 20%. They went from selling 500 to 600 cars a week to selling barely 200 in a week. Clearly, they're not getting a lot of sales, and they're not buying much cars to auction because a lot of people aren't selling cars to them. This is happening because Carmax has stooped advertising about buying cars from the public. And this is a good move on their path, as they can tell the coming months won't be favorable for used car prices. The pandemic played a fast one on used car dealers throughout America, no doubt. It gave them a false reality of the way sales were skyrocketing. If these companies had correctly read what the signs were, then they would not have been in so much trouble. These car dealers bought too many cars in anticipation that they would make sales as usual. They've been unable to sell like before, and they are recording crazy losses. They failed to see that the reason why they had so many customers was because consumers weren't able to get the products they wanted because of a reduced production on the part of automobile producers. Now these consumers, in search of the next big thing, landed on the doorstep of used car dealers like Carmax and Carvana. Naturally, when that which they sought is now available, they'd go back to it. Before the tides turned on pre-owned car dealers, Carvana, high from the sales it was making, made a wrong decision and bought car auction company ADESA for $2.2 billion. They bought these many cars with the same mind as every other profit-seeking business, to make a profit. The cold shock it received in the coming months was excruciating. Carvana's debt repayments have risen. This is making investors worried about the company's prospects. On January 25th, Carvana's stock closed at about $6.50. This was too bad for a stock that formerly was at $350. The spokesperson for Carvana insisted that the ADESA deal was not a bad one because they are looking at the long-term benefits. Well, empty vending machines don't look like they agree with this. The company has said it is making plans towards reducing its cost by about $100 million this year. So for now, the goal is to sell more cars than they buy and not buy so many. The past year has been a roller coaster for America's used car dealers, with Carvana and Carmax facing unexpected challenges and setbacks. As new car manufacturers continue to pose a threat, these dealerships must remain on high alert, finding new ways to innovate and improve customer satisfaction. At the heart of this effort lies the need to offer attractive payment plans that speak to the needs and preferences of today's discerning consumers. Despite the uphill battle they face, we remain hopeful that Carvana, Carmax, and other dealerships will rise to the challenge, emerging stronger and more resilient than ever before. The drama of the automobile industry may be intense, but it is also an exciting time of transformation and growth. We wish these dealerships all the best in navigating this dynamic landscape and look forward to seeing how they will adapt and thrive in the years to come.